accommodation, people are coming back. So there is a lot of movement that's happening on our side. And we just, let's say if we had worked during the lockdown, I think right now it's also, sort of increasing and there's a little bit of pressure happening. Yeah. That's what I'm asking about how things are going on your side.
Yeah, no, I think it doesn't stop. Hey, when you're running on your own and doing your own business and you've got things going, it doesn't stop no matter what. I don't think even a lockdown can stop us and stop what we're doing. Yeah.
No, I definitely understand. Okay, we're live on YouTube too, which is cool. So I think where's this Zoom thing? Sorry about that. Here we are. Okay, so I think more people are going to be joining us now. People always use African time. We're a little bit early. So I think we're going to be getting more people jumping in now. So we have like some interesting topic I wanted to talk to you about, especially because you're one of the people who took advantage of what was going on in 2008 financial crisis. I think the question that I wanted to ask you is, do you think what we're going through right now is comparable to that? Or because of the COVID-19, do you see like us having a different scenario and we should be having a different approach to what's going on right now? That's something I always wanted to ask you. Yeah.
Cool. Okay. Should we have a different approach now to what we had in 2008? So it's interesting. 2008 was the effect of 2008, or where it happened was the result of a really bad financial system, bad financial setup. South Africa was ready to be protected from the 2008 financial crash because of our acts and our banking system, which was fortunate. But I was out in the UK. I was out in the UK at the time, and it had a dramatic effect on everything, lending, on the market, on sentiment, on everything, risk outlook, everything. So it did cause a bit of a stuck in a shutdown, and where the big effect came was that people just couldn't get finance. The banks started shutting down their finance options for people, started putting a lot of checks and balances where you couldn't really expand your portfolio. It bit a lot of people. So it did the same thing now, where a lot of people that were quite exposed to property and the debt side of property, they had massive short. I do see this crisis slightly different, and the reason for that is that it's going to be the lockdown, which has really had the big effect on what we're doing, has a really short-term effect on people's cash flow. So it hasn't, people who have been sitting with lump sums of money, they're not going to run out of money in the next sort of three to 6 months, and they're going to have that ability to buy. So again, people that have been exposed to the market on the debt side, so they've over-leveraged their properties, are going to be in trouble, and the guys that have been ready to buy are going to be able to come into the market in the next 3 to 6 months and take advantage of that, particularly because the bank's lending criteria hasn't changed in South Africa, and the appetite for lending hasn't changed. They still are quite open to lending. So it is a different scenario, and I think it's actually a big opportunity now than 2008. 2008 was way more drawn out, a lot longer tail. We had a 2008 to 2012 dip. Yeah, this one's going to be a bit shorter, I think.
What about what's going on right now with the social distancing? Don't you think that is going to also affect consumer behavior? And I saw from another article I was reading, articles, newspapers and things, these days you must be careful what you read, but they were talking about how students are deregistering at WITS, but I don't think it's a lot of them. I think at UJ we have around 52,000 students. So if any students, let's just say 1% or 10% does deregister, I don't even think that it will affect like a lot of business like that. But at the same time, I saw students who were deregistering. Some parents are thinking it's not safe to go to school because of the COVID-19. And I'm just wondering, in terms of the way we school, the way we use our homes. Now your home is an office. The way we do like consumer behavior, the way we go shopping, the way we stay where we stay, and all those things. Don't you think are going to be getting affected by what's going on right now, or do you think are something that we can be able to adjust to in terms of the changes that are happening?
Yeah, so I mean, there's this big movement towards online schooling. I think that's the one thing. My kids are on a private school, and there's lots of conversations about doing homeschooling and then doing these online schools, online
Okay.
university, digital learning. So I think there's going to be a movement towards a big hybrid. So maybe we're not going to have this density of people that we did. I mean, I was at UJ at the time, and now 20 odd years ago, and we had 20,000 students on campus. At any
Okay.
one time. It's much more now, obviously, but I think you sit in a position where the density of the students at any one time is going to be far less because of the leveraging of digital assets, so Zoom and digital classrooms. I don't see that it's going to put a massive dent in the demand for student accommodation, short-term letting, and accommodation around student villages and student so at universities and colleges. And there's a few reasons for that. Firstly, humans are social animals. We don't want to be stuck in at home. So you can already see in the lockdown, people have still tried to get out and sort of associate. And I know myself, I would make sure that I was going shopping for essential goods every couple of days just to get some breathing space and see some other human beings. So that's the first thing. The second thing here is if you understand as students don't want to live at home. They want the option to be able to move out. There's nothing worse, I think, for an 18 or 19-year-old to have the option to maybe go and live somewhere else and enjoy student life. And now you're living at home with your parents studying digitally. That's not the student experience. And that student experience is not going to be experienced online over Zoom or anything else. So there's still going to be that want and that need to have that student experience. And that's just an 18, 19-year-old sort of outlook. So again, if we go back to the short-term effect of COVID and the lockdown, yes, there's certainly a health crisis, there's a pandemic, there's going to be an effect, but I do think it's going to be short-lived in terms of we want to get back to a new normality as soon as possible in terms of socializing, living elsewhere, experiencing certain things. We're experience-based, humans want experiences, and that's really what student accommodation, living near that, near your schools or your university does for you. So it will have a short-term effect. It will have a short-term effect on you if you have poor accommodation. So I think where this whole thing, and this is what excites me a little bit about this pandemic, not the pandemic itself, obviously, the lockdown, is what it's doing is going to clear out a lot of industry. So it's going to clear out in the student accommodation space, there's going to be less demand, but the guys that are providing quality value accommodation, it's not the guys providing, really bad accommodation, but they were just taking advantage of pent-up demand. But from a business point of view, the guys that have got bad business models are going to lose their businesses. The guys with better business models and adding value to consumers, they're going to retain their businesses. So, and we've all been doing all these webinars and everything over the last sort of 10 weeks. And one of the very first webinars I watched was some guys in venture capital. And a saying that I've stolen and I've been using a lot is when the tide goes out, you'll see who's been swimming naked. And I think it's a brilliant analogy for business, for landlords who are providing low value products and just relying on this huge amount of demand. So we're going to a space where quality value is going to be your value proposition to people, and that's what they're going to take up. So bad business models, poor product is going to lose the game at the end of the day.
I definitely agree with you. I think also one of the designs that we saw that was happening a lot in the market, basically on student accommodation, was sort of a lot of sharing rooms to maximize the profits because NSFAS pays per bed, and so that didn't have a lot of value inside. But I think, as you mentioned, that we're going to need to add more amenities now. Like maybe you have restaurants around, you have better places where it's a little bit open, a lot of single rooms happening, and then you can be also convert them in the future. Maybe have an exit strategy. You can convert into affordable housing or things like that. Okay, so I see like some people are coming in right now. I want to start by welcoming some people who are just are finding us in conversation. Welcome, guys. Let us know who you guys are watching from. Today I'm with Grant here. Today we're going to be talking about some keys to successful investing in 2020 or post COVID-19. So let us know where you guys are watching from, and welcome. And I think more people are still coming in because we had a lot of people register. So guys, welcome, and let us know where you guys are watching from and what you're excited to learn about today, so we don't miss out on that. Just let us know on the on the chat box, actually. Use the chat box to let us know where you guys are watching from and what you guys are excited to learn about today. We're going to be talking about the keys to successful investing in real estate, and we're very, very excited to have you guys here. I'm here with Grant, and more people are going to be coming in now. So we're going to give them the next 3 minutes or so we can be able to also help and be on the same page with the other guys who are using African time. So I hope you guys are going to be a little bit patient there with us, and we're just going to be starting in a bit. Yeah, so let us know where you guys are watching from and what you're excited to learn about today. And I'm just also going to be taking you guys what you need to know about today's live stream. And a few house rules that we're going to be going through together. So I'm just waiting for more people to come in, and we'll go through that in just 5 minutes. So in the meantime, let us know where you guys are watching from. Let us know where you guys are watching from. And if it's your first time here, also let us know if it's your first time. And we're looking forward to having you today. I'm going to be welcoming you. Actually, just let us know where you guys are watching from and what you're excited to learn about today. Okay, so I see somebody just sent a message now saying, hello, chat disabled. Really? So sorry, Candice, but we can see your chat. Okay, so let's sort that out for you. Let's sort that out. I see chat to all panelists. Okay, I just enabled your chat. I'm gonna enable everybody's chat. I don't know what happened there, sorry guys. Chat disabled. So can you guys text us now? Let us know where you guys are watching from. I just enabled everybody's chat. I don't know what happened there, but just let me know if you can be able to send us a message. Let us know where you guys are watching from. And Kenneth, thank a lot for the feedback. Also, for any other technical issues, if you can't hear us properly, also let us know in the chat that you can't hear us properly. I'll also be muting my mic soon as we start to speak, so we can be able to have like a good network there. Okay, reopen. Good network that is coming in now. So I can hear some signal that's coming in now, but I think we're going to be starting out in just 2 minutes. Hi, chat is still disabled. Okay, so guys, so I'll sort it out for you guys just now. Allow participate, point entry, chat. Okay, I'm gonna be sorting that for you guys just now, and then let's see what we can be able to do there. Chat. Just let us know, okay, in the Q&A box where you guys are watching from, and we'll be sorting out. Yeah, Q&A chat is enabled. Okay, yeah. You guys can actually use the Q&A chat as fine. Then we'll be figuring out how to enable your chat box so we can be able to open up from there. I just saw a message from Edgar here saying the Q&A chat is able. So that's good news. But otherwise, I'm sorting out you guys on the chat. And we're going to be just starting just in a bit. All right, so please let me know. I just enabled our first time here working from Kimberly. Working, thank you very much for joining us today. And we're going to try to add as much value as we can so you can actually not regret and see this the next 45 minutes to an hour as a good investment that you make today. So thank you for joining us from Kimberly, and we appreciate having you here today. So what I'm going to ask you guys before I start is, okay, I see somebody saying, hi, Ezra. I'm from Cape Town, excited to learn all things property and about your journey. Thanks a lot, Kathleen, if I'm saying the name correctly. And yes, you will learn about my journey also, but I want us to learn as much as we can about Grant. And I think he has like some tremendous experience in real estate. And I'm also going to be helping out. Also, I'll chip in on my journey and how I started investing in real estate in a bit, if we still have time. And I see somebody says, first time attendee from Devon, that's my daughter. My daughter, thank you very much for joining us today. And we appreciate you taking your time to join us today. We're going to try to add as much value as we can for you guys. And we hope that you enjoyed today's session. And if you just joined us in right now, just let us know where you're watching from. And I would really appreciate to know you. It actually also makes for a very good dialogue, because we try to make this webinar as interactive as possible. If it's the first time here, just know that we try to have an interactive and intimate webinar for reasons like we also already have social distancing, so we can also be distancing here online. So we try to try to make them as interactive as possible. Okay, so I think we're gonna just have to start right now. Let me just go through a few house rules on so we can be able to all be together on the same page as we begin. Okay, so it looks like our chat box is not working fully, 100%. I'm not sure what happened there, but what we can use is our Q&A box, which is the good part about it. So we can use our Q&A box. If you guys have any questions, I think you can also use it to let us know where you guys are watching from and what you're excited to learn about today. Okay, I see hi there, first time here, Nabuweya Abrams from Cape Town. Okay, Nabuweya, I hope I'm saying your name correctly, and thanks for joining us today. We're gonna try to add as much value as we can by the end of today, so you can see this time as a good investment that you made today. I just wanted to welcome everybody else. I see also Wendy. We have a lot of people from Cape Town. Hey guys, welcome. How's it going in Cape Town? We see Wendy Olivier from Cape Town. Wendy, thank you very much for joining us today also. We have Cape Town, we have Devin, we have also Kimberly. Thank you guys for joining us today. We're gonna try to make this webinar interactive and intimate as possible. And we're also gonna be opening up for questions at the end so you guys can ask any questions you might have about what's going on right now. One of the big questions I've been getting recently was, is it the good time to invest in real estate today? There's this pandemic going on right now. There's a lot of uncertainty that's going on in the market. People are not sure if it's the right time to invest in real estate today. So we're gonna also be touching on that, and I hope that Brent can also be able to help us answer that question too. All right, so let's just go through a few house rules. The most important one is that, let me see if I can do that. The most important one is that since our chat box is not working, so we're gonna be using our Q&A box actually to be able to, I just wanna do this quickly. Done. Okay, we're gonna be using our Q&A box to welcome everybody else who's coming in, and also gonna be using it to answer your questions. So I want you guys to let us know where you guys are watching from. And when you're asking a question, just let us know where you are watching from if you haven't already told us. It always makes for a very good interactive webinar, and we can also know a little bit more about yourself. And then I think that the second thing is that we also have, if you can see the chat box, we already have a free ebook there. If you guys haven't got it, if it's your first time here, then please get the free ebook. It's about investing in real estate with no money, which is some strategies that I use personally. And you can find that all in the chat box. I'll also try to put it here in the Q&A box, so you guys can be able to get access to it. Also, I just saw another messages coming in now. Oh, I see Candice. Candice is from Stormy, Summer West, Cape Town. Hey, everybody, Candice, welcome, and thank you for joining us today. It's good to have you here today. All right, so yeah. And then we have Shia from India. The ebook was just awesome. Hey, Shia, thanks a lot. I don't know, can you guys can you access the ebook that is actually on the chat box? Please let us know, or else I'll have to post it in the Q&A so you can be able to get the ebook. So it seems like Shia also likes it from India. Thanks a lot. And there is also our course that we have for NMRI. This is just helping you guys close your first deal. If you're a real estate investor or you're an aspiring investor, this is something that you want to put your hands on. We have it on the launch price right now until the end of the lockdown, until things get back a little bit to normal. So, oh yeah, I managed to download it from the link in the email. Oh no, thanks. That's good. That's good, Candice. I hope you enjoyed the ebook. Just also let us know how did you find it, so other people can also know the value that you actually managed to put in the ebook, because we try to add as much value as possible for you guys. So I think we're gonna have to begin now. The second thing, no ebook on the chat box now. Okay, my daughter just said no ebook on the chat box now. Okay, let me just help you with that, my daughter. I'm just gonna answer that for you. Type in an answer there. Okay, so just check. Okay, you can now see it. Just put it on the Q&A box. Just let me know if you guys found it. There's a link there that you can be able to use and get access to the ebook. All right, and then there's also, of course, on the launch price, as we said, and I think you guys must check it out. Okay, so let's get into the business of today. So if you have any questions, we're going to be opening up a Q&A at the end of this session, and then you guys can be able to ask any questions that you guys have. And at the same time, when you ask questions, I mentioned before, please let us know where you are watching from. It also helps to make for a very good interactive webinar. And we really appreciate that and thank you in advance. And I think that if it's your first time here, also let us know. It's very, very important, so you can let us know, so I can get in touch with you also and let you know a little bit more about what we do. So we're going to try as much as possible to get a lot out of Grant. Grant is one of the people who I look up to, and the people who inspired me to start on my real estate investment journey. And I think that we're going to be learning a lot from him today. What I want to ask you guys to do, though, is actually remove any distraction. If you're watching TV, laptop, anything like that, I just want you for the next 45 minutes to an hour to be focusing and just being here with us so we can try to add much value as we can. Okay, so let's just get into today's webinar. We're going to be talking about keys to successful investing post-COVID-19. My guest here today is Grant. Grant is an entrepreneur and a property investor. Grant, you studied accounting and finance, starting out your career in financial institutions in London. We spoke about it here before people joined us today. And I think they'll be happy to learn a little bit more about that later. And then in 2005, at the age of 27 years old, you pursued your passion of property as a full-time investor. 2008 financial crisis created an opportunity for you to further your entrepreneurial endeavors and open a property services businesses, which expanded into a portfolio of businesses today. Also, these businesses include Only Realty with 21 franchises nationally, where you are the managing director. You're also the managing director of Ebook South Africa, which is a community for the education, creation, and support and empowering entrepreneurs and property investors, and also Belmont Property Management with expertise in sectional title and homeowners association. So one of your goals is actually changing the DNA of every South African to take responsibility of their own financial well-being and create financial abundance through business, property, specializing in property investment, startup business, and the buying and selling of business. Grant, welcome and good to have you.
Absolute mouthful. Thank you, Ezra.
100%, 100%. So Grant, can you let us know a little bit more? I'd like to know a little bit more about your background. I'm sure my guest today would like to know the same. Can you let us know who was Grant before Only Realty and Ebook South Africa? And how did they both come about before we get into the business of the day?
Cool. So yeah, I guess let's start where I come from is the East Rand in Joburg, Boksburg specifically. So I spent the first 22 years of my life out there, and you know, had a good youth, and went to Boksburg High School, and still have a load of friends out there. But I then followed a path of becoming an accountant or chartered accountant. That was sort of the plan, you know. And in the mid 90s, 1995, 1996, that was the job that you got to be almost secure your financial freedom or your financial future, was become a chartered accountant. That was the big thing. So I followed that that sort of journey. Went to university, went to Rao at the time, Randolph University, now UJ, and started studying accounting. And I realized pretty much midway through the second year that I hated every second of it. It's probably not a good time to realize halfway through your degree that you don't enjoy what you're doing at all. So I followed it through. I started my articles, and then I think I had a realization probably 2 or 3 months into doing my articles that this was not where I wanted to be. And I booked a plane ticket to London. Went to my boss at the time, gave him notice, and he sort of tried to make a counter offer or offer me more. And I said, look, you know, I've already booked my plane ticket to London, and I'm off to London. I went out there, and funny enough, it was actually the 2002 recession in the UK. So I got out there, and there were no jobs in London at the time for accountants, and it was particularly inexperienced accountants. So I went out to Wales, spent 6 months living on Australia Road in Cardiff, and sort of got my start in the UK in accounting there in one of the banks, Lloyd's TSB at the time. 6 months later, went back to London, started in the financial services industry, and then my goal was to get into the funds. So I've had a massive interest and still retain that interest in investing in funds and equities and bonds, and my idea was to sort of get into one of the investment funds. So I spent a better part of 3 years making every effort to get into that space. And I ended up at a boutique investment fund, managing $400 million at the time. Not myself personally, the fund itself. And I worked there for a while. But while I was there, and I still maintain from my working life, that was probably the best time I had, was working, these long days in a quite an exciting environment, trading. We were trading shares, we were looking at investments, and it was a really exciting space. But there was always something that sort of was missing, and it was really property. So I always had this thing that I need to get into property and invest in property from probably end of primary school, early high school. I always knew I wanted to be in property. So I went and I did a property investment course, like most of us have. Got myself educated with a friend of mine from university, Richard, and we started buying property in London. And that was really the start of my property investment journey in 2005, was buying properties in London. Expanding that portfolio. Still retain most of that portfolio in the UK, so still have that, and Richard manages it. He lives in Australia, so he manages from there. And then 2008 came, which you mentioned there, and 2008 presented a few problems. Was that we couldn't get finance anymore to expand our portfolio. Interest rates, before they went down to the all-time lows that they are today, they started going up, so our cash flow was under pressure. And we created, and that was we had to tap into something. We saw an opportunity in property management. So we started a property management company, and 3 years later we sold it to one of the biggest property management companies in London, in Southwest London, just before I came back to South Africa. Then change of country, change of scenery. I thought, let me get out of property, and I tried something else. And for 6 months I was in a manufacturing business, and quickly realized I hated that. And again, then went straight back. Once you're in property, it never gets out of you. Property gets into your blood, and it sticks with you forever. So I got back into property and bought into an Only Realty franchise at the time. 6 months later, I was managing director of that company, and as of 2016, I was 100% shareholder of the head office there. Got now 2 business partners in that business. And while running Only Realty and expanding that business, I was involved with another education company, and Epic, the opportunity to create Epic, the community around supporting entrepreneurs and property investors, sort of presented itself, and I took that 2.5 years ago now to run with that. And the problem is that so many people get educated and taught how to do things, but a lot of the classroom training is very theoretical. It comes from trainers who have heard the courses before, but have never experienced it themselves, haven't been on the ground, haven't experienced the nerves and the energy you get from doing, and the nerves from when a deal goes wrong, and the pains. And so these guys are really teaching from a theoretical point of view, and then they just leave the students to go on their own. And I really felt there was a need for ongoing support of these guys. So that was the creation of Epic, and Epic's now expanded from not only supporting property investors and entrepreneurs, but also into the education space. So we've had some of our own courses. We just finished our property development course last week, which was great. So it's the exciting space. Only Realty, Epic, and I've got Belmont, which is a sectional title management company. All of them attached to property by nature. I don't think they're ever going to let go of it. And then, like I said, I've got the investment business still in the UK. So just on mute, Ezra.
Your story sounds very inspiring, and it seems like it's something that property was actually looking for you. You were not looking for it. You knew what you wanted to do, and then somehow you ended up finding your way back to investing in real estate. Even after you tried some manufacturing, I also started in fashion, and my business just went south. That's why I came to property, and I got inspired by people like you. I just wanted to ask, so what are some of the struggles that you had when you guys started out with both Only Realty and Epic, and how did you guys overcome them? Because this is what we're all about, overcoming struggles and obstacles along the way.
Yeah, look, I mean, anybody that tells you they've started a business, they're running a business, they're in property investment, they have a business of any sort and have never had struggles, only experienced success, are blatantly lying to you. And it's part of the journey, and it's part of the thing. I think one thing firstly is as an entrepreneur or property investor, you need to be able to stomach the ups and the downs of this journey. There are always going to be ups and downs. You had guys that were investing in property 4 months ago that were making a killing, and then the 3 months of lockdown have absolutely murdered any profit. So So you experience these ups and downs all the time. So you need to be able to stomach it. Some of the difficulties, I mean, if I start just with Blackwood, which is our business in the UK, Blackwood, we made a few mistakes early on, and you sort of in your mid-20s, you know, you full of testosterone, you think you're going to take over the world. And we made some really early fundamental mistakes. And the very first mistake that I sort of always think about was I left my job too early. You know, we got ourselves financially free, which is not really a thing, but we didn't have expenses to worry about. We had income which was covering most of our expenses, and we left our jobs really early. And what it did from a property perspective was put us on the back foot in terms of getting finance. So we really struggled to get finance and grow that portfolio. And Richard and I both would be much further along right now if we hadn't left our jobs so early. But we, you know, we were so determined to prove to everybody that the thing was going to work, and prove that we could be financially free. And we used to joke on weekends, you know, we effectively retired. We don't have real jobs, which is the furthest thing from the truth. But yeah, no, it's one of the things. So I think the first mistake was leaving our jobs early and then struggling to get finance, and you have to then build that track record, and it takes a long time. From an Only Realty perspective, one of the very early learnings was choose your partners wisely. We had early 2012, 2013, there were some other shareholders involved at the time, and just we didn't align from across anything. How we did business, integrity, honesty, transparency, how we ran a business, how we interacted with people. There was just so many differences. And initially, all the excitement about getting involved in this national business sort of glossed over the fact that from personality point of view, and from how I run a business, and from just who I am as in terms of my values, didn't align with those partners. It made a big mess. And in fact, what it did was, again, put me on the back foot for the better part of between 3 and 5 years, really, in terms of firstly dealing with partners that I shouldn't have been, and then once they left the business, rectifying the business and put it back to where it should have been. So that really set me back from that perspective. But I'm glad I went through it, because the learnings through that have been enormously useful subsequently. But I would never put anybody that I know through that pain of going through bad partnerships again, you know, because bad partnerships I think could potentially be worse than bad marriages. You know, it's far easier from a legal perspective to get out of a marriage than it is out of a bad business partnership, you know. So it's a really tough situation. From an Ebook perspective, you know, it's been an interesting one, because it's not an industry that I know, the training and the support and the community space, but it's where it's been tough is just trying to show the real value to people that I believe that the business has. But what's been really great is the people that we do engage with, the community we do engage with, have been giving some really good and positive feedback. And you know, we've got a relatively close-knit community. You know, I communicate regularly with about 2,500 people who are on the Ebook platform, and you know, we get some really good feedback. So yeah, so it's been a struggle, and I think the struggle is that Ebook's in that startup phase, which, you know, I thought I was past, but I don't think I'll ever be past having a startup at some stage.
100%. I mean, some of the most exciting days of an entrepreneur is running a startup, and you know, having to figure out each day as you go. So I think, you know, even if you make something, like you make a business that is bigger, then you get bored because it's not a routine. So now you want to go back to, you know, getting your hands dirty and, you know, figuring things out as it comes. I wanted to say though about bad partnerships that will cost you more. Actually, I also had a very tough experience with partnerships. However, I still recommend it as one of the ways that people can be able to, you know, fast track their journey in the real estate investment businesses or real estate investment journey. So I wanted to say that one of the things you mentioned was saying choose your partners wisely. So what are the ABCs there of choosing partners that you can share with us, just so for other people who are, you know, are looking to, you know, start in this real estate investment journey, and they can also be able to use that to be able to screen and make better decisions.
So I'm going to go with the first one, which is really your gut, first and foremost. You know, gut feel is important, and if I go back to, and I've had a couple of bad partnerships, but none worse than the one I referred to. But even some partnerships in the UK, you know, I realized pretty early on that it wasn't going to be the greatest partnership from a gut feel. You just felt like we had different outlooks. Although when we spoke about things, we had the same long-term vision in terms of property, long-term achievements, long-term goals. in the short term, how we dealt with people, how we achieved those goals differed. So I think first thing is trust your gut in terms of people. Don't get sold. You know, a lot of people that are in business or trying to get into business and might be a bit shady are really good speakers, really good salesmen. You know, but that sales talk and that talk doesn't come with a lot of substance. So trust your gut first and foremost. Second one is make sure there's a really good contract in place. And when I talk about a really good contract, don't make it up yourself. Get an attorney involved. Make sure there's really good exit clauses, because an exit clause out of a partnership is the same as your antenuptial agreement when you get married, you know. And it's really strange for me that so many people will get into marriage and make sure they have an antenup, because you know what, I'm going to make all this money, and you know, if we ever get divorced, we need to be able to split it equally or evenly or whatever the situation. So we're quite comfortable having the conversation with that person that, to be honest, we're supposed to spend the rest of our lives with, to sign a contract just in case we're going to exit. But then we get into business partnerships, we're going to make all this money as a partnership, we just never sign an agreement, and everything's on a handshake or over a bar or anything else. So make sure that partnership agreement's in place, and very clearly defines how the exit happens. So I think those are the two things, because you know, go and sit with somebody and understand and see how they deal with people. You very quickly understand whether that person's values align with your values. You know, so yeah, a couple of tips.
No, I definitely understand. One of the things, though, is that, you know, some mistakes are inevitable. You know, some of them you can't avoid them, but some of them you can try to avoid them and learn from other people's experiences. And one of the things that I'm also picking up is, you know, you're just saying be a good judge of character. And I don't think that also is something that comes naturally to a lot of people. It's something that, you know, you get over time as, you know, sort of get into those bad partnerships and then try to learn, and also being able to leverage other people like your mentor and things like that, so it can be able to help you along the way.
Absolutely.
So I just wanted to speak about one of the trainings that I went to when I started my listed investment journey was the legacy training, where I saw you and some of the deals that you did. I actually have a deal in front of me right now that you did there. I think the deal was going for 1,850, and I think you were spending around 612, or let's just say 612 on the buying costs, which is the deposit, legals, and refab. And I think it was making around rental of 25,000 Rand. You turned it into a commercial property, and then you didn't pay for the rates, operating cost, and management. And then I think the net profit was around 8.9. So this was one of our cash flow exercises that we did there. And then the part two of it, you changed it and you actually maximized the profits by actually increasing and putting in a billboard, you know. And then, you know, increase the net cash flow to 35,000 a month. And I was telling you, I was studying engineering at the time, and I knew I hated it. So I thought, okay, I knew that this average salary of an engineer is 20,000 Rand to like 25. So when I saw 35,000 Rand there, I was like, you know what? If I do this, then I don't have to get a job anymore. So I just wanted to ask you to say, okay, how can real estate investors think outside the box today and take advantage of this uncertain time and find such great deals? Because most of the time we find people doing like very mediocre buy-to-let, you know, simple deals. I'm not saying it's mediocre per se, but it's not like allowing you to become creative, because I think I love real estate because it allows me to become a creative person. What are your advice on thinking outside the box as an investor?
So I think, I mean, my first thing is to have these conversations, realize that there are opportunities beyond just the traditional buy-to-let. Interestingly, in those courses that you attended where I spoke, I would often speak about how boring buy-to-let is as an option, and how I didn't find that it was very exciting. And I like, if you're going to do business, do something that excites you a little bit, that gets your blood flowing a little. However, I will sort of change that a little bit. In the current environment, the buy-to-let model is actually something that would potentially work and could potentially create a really nice foundation for your business going forward. How do you think out the box? Again, have these conversations, spend a lot of time at properties, you know, explore opportunities, read as much as possible, you know, because it's not that deal, I'd seen deals like that before. And in fact, that deal made sense before the billboard option came up. You mentioned the 8,500 Rand net cash flow. Before interest rates actually increased, because interest rates increased just before, or just as I got that property. So before it was 8.5, it was actually 10,000 Rand a month was the net cash flow on that deal. The whole thing is, you know, I think if you, there's a saying that I hate in business, and I think I apply it into properties. That's how it's always been done. You know, and it really, that's something that drives me mad. That's how it's always been done, and that's how it's going to be done going forward. if you take that as a mantra and say, look, if that's the thing that I hear, then I need to change that. Then you're going to always be thinking about what are the other opportunities here, what are the other things I can see. And what I saw with that property was that it was on a main road, it was busy, the lady just couldn't sell it, and her comments to me were, no family wants to live on this road. You know, it's really difficult, it's a really busy road, safety issues, everything else. And straight away it started screaming, it needs to be an office. And that was really the space that we then started considering that opportunity in. So again, take every property you view and write down 3 other things you can do with it. You know, even if you're buying a unit in a sectional type of complex and it comes with maybe a garage and a carport, you know, if you put a tenant in and they've got 1 car, they get the carport, rent the garage out for storage, as an example. It's a silly example, but sectional type of complexes are really difficult to change their use. But once you start getting to freehold space, you know, you take a look at the use of the property, the location of the property, and there can be so many opportunities in that space. The one thing property caters for very, very well is a lack of attention. So I've got quite a short attention span. I get bored of things very quickly, and I like hopping around. And that's what property caters very nicely for that space. So become a student of property. Take a look at opportunities. I love reading overseas publications or articles about ideas in property, and particularly in the space we're going to, in the micro living, micro accommodation space. You know, there's lots of articles out in the US, in New York, in Hong Kong, in really dense cities where they're coming up with fantastic ideas on dense living and micro living, and then bring those ideas and apply them here. You're not going to put a 12 square meter flat in place here. You know, you get a 12 square meter flat in New York, but it's not going to work in South Africa. But the concepts around how they did that and why they did those things, the space saving, could end up, you could end up with a micro living unit, 20 square meters, which works perfectly well as well. So yeah, so just so these conversations, be curious and interested, and read loads.
100%, and that's why I also encourage people to join us on this live stream so they can invest in themselves as much as they can, because we're not talking about some of the things you can find online. Online, you're going to find more generic information. So we are going into the details of actually how things are done. One of the things you mentioned was it also caters for lack of attention. And I think that's why I think property is a good vehicle for a lot of millennials to build wealth, not only because of the lack of attention we have, but also because you're going to need larger retirement funds than, you know, our parents and the people that are actually, you know, right now are the adults. So that's also one of the reasons why I think it's a very, very good way and a vehicle for millennials. Just that they still lack the information, they still lack, you know, the knowledge about how it can be able to enable them to, you know, reach their financial goals and financial independence. Okay, so some of the things I wanted to discuss today was to touch on the impact of COVID-19 on the real estate market, and some tips on successful investing, and also property investing post COVID-19. So I just want to start on the impact of COVID-19 on the real estate market. I need to find out your view on the good and the bad and the ugly on the pandemic, and also on businesses in general.
Yeah, the good, bad, and ugly. Okay, well, I'm going to keep it all around real estate, because I think we've all got opinions about what's happened in terms of the economy and the lockdown and shutdowns across the world. But so look, what the shutdown has done has laid bare a lot of really, and we spoke about this before the broadcast started, laid bare a lot of really bad business models, laid bare a lot of really bad products in terms of what people bring into the market. Let's use student accommodation, like you mentioned, you have people squeezing a lot of students into a single place to just take advantage of the funding options that are available to them. So I think what the lockdown does, the shutdown does, has allowed the market to clear the decks a little bit and put us in a position of a value market, and where people really need to receive value for the rands that they're spending. So, which excites me. Yeah. So it's one of the positives that have come out of it. What are the negatives come out of it? It's obviously put a lot of people in financial positions that they weren't expecting, because they were maybe highly leveraged, highly geared. Maybe they didn't have enough of a buffer set aside for you know, anything that their unforeseen circumstances, as an example. So it has put a lot of people under massive amounts of financial pressure. The flip side to that is that it creates an opportunity for us as investors to get into market at a discount to what it was even last year, potentially. Get quite creative in terms of our structuring with people. So maybe you've got people that don't want to sell the property but need to make use or better use of the property. You can get into strategic partnerships with people as well. So it actually really makes the environment super creative. Off the back of that, the banks haven't really taken away their funding options. The banks are still quite interested in funding people and doing stuff. So funding options available. There's quite an appetite for buying at the moment. We've seen it being quite busy since the rest of the market reopened in the last week or so. So it's been quite busy. There is a lot of appetite for buying. And then you're going to have people who are under pressure to sell or make use of their properties that are going to be open to creative strategies. So there's a lot of good that's come out of this. I think for a lot of people, the bad, is sentiment. You're going to have the general population. You're going to have a relatively negative sentiment. You hear a lot about how the economy is going to struggle, how it's going to sit in a recession, how the rand is going to continually devalue. So you're hearing a lot of negative stuff. And what I'd say to you there is ignore it. It's actually got no bearing on your decision making right now. Where the overall economy is going, does that really affect your long-term outlook? And property, let's be honest, is a long-term game. Property is not let's make money in year one. Properties make or to be fair, not even make money for yourself, it's make money for future generations. So it is a long-term play. So ignore the immediate sentiment now, because if you make decisions based on sentiment, you're never going to really take a decision. It's never going to be the perfect time to buy.
100%. So I think also you already touched on some tips on how people can also take advantage of the crisis. It's actually realize that the crisis that is already there is also in their head, especially from the news articles they're reading and all the media consumption and all those things. And it's creating a lot of fear on your head. And now you'd end up not investing. And I also was going to ask if it's the right time to invest. So you did mention that it is actually the perfect time to invest, because now is when you require solutions, creativity, a lot of partnerships, collaborations. And I think that there's nothing better than that, because when everything is good, not a lot of people are collaborating. When everything is good, not too many creativities required on the market. What's working is working, and you are one of the guys who are trying to make it. But at this point right now, it's like a little bit of a fairground where people can be able to collaborate, take advantage of what's going on right now, come up with creative ideas, new ideas, and then be able to implement there. So I see we just received 2 more questions right now. Tandy and Kanya, we're going to be touching on these questions just in a bit, actually towards the end. I just wanted to finish up a few more questions here, then we're going to be opening up for you guys. And then, so one of the big question right now is what's going to be happening, post COVID-19 on property investment. I would like to hear your thoughts on that, and also some successful tips on how people can take advantage of 2020 the same way you've taken advantage of the financial crisis that happened in 2008.
Yeah. Okay. So I mean, post COVID, I mean, nobody knows when that really is. Let's be fair. We don't know whether there's going to be a second wave of infections. We don't know if lockdown is going to escalate or de-escalate. We just don't know. We're playing this big unknown. But again, if you take a view that I'm going to invest in property, because the one thing I want to say here is if you're willing to buy a property last year at R1 million, and that very same property today is worth 900,000 rand, the only reason for that devaluation is the crisis we're sitting in. If we go back to relative normal, we know that property is going to be worth R1 million next year. So we have no doubt about that underlying value. That's why it's the least risky asset for banks to lend against. That's why the lending against is the cheapest. So there's a lot of reasons, a lot of things that say that the underlying asset, the value of the asset remains still. It doesn't disappear. So if we're going to take that view, then any time is a good time to invest in property, to be quite honest, if you're taking a longer term view, depending on your strategy. Post-COVID, what do I see happening? There's going to be a continuation of downgrading or downsizing of properties. People are going to move out from bigger properties to smaller properties. And that's been a trend, not because of the lockdown or anything else. That's been a general trend over the last sort of 5 or 6 years. People have been moving to smaller properties. Developers have been making smaller properties. We're getting used to living in smaller spaces. 15 years ago, you'd buy a 2-bedroom property that was 98 square meters. Now you can buy a 2-bedroom property that's 67 square meters. So really, that's a 30% decline. So we're getting used to living in smaller and smaller spaces because the cost of maintaining these big properties, big gardens, big homes is very, very expensive. So we are naturally downgrading. So that's going to continue as a trend. Affordability levels, a lot of people have lost their jobs or have got discounted salaries, so they are going to be selling again their bigger homes to downscale, downsize their expenses again. And then there's this densification thing, which I've been going on for, if anybody's been listening to any of my webcasts or any of my podcasts or anything, I keep on talking about communes and communal living, and I'm making a distinction between student accommodation and professional communes. Student accommodation is a great investment strategy because we know there's this accommodation shortfall. There's 200,000 bed shortfall in South Africa. That's going to remain in place despite the lockdown and digital learning and everything else. There's still going to be a shortfall. That shortfall is not going to disappear. It might lessen. It might be 150,000 beds, but there's still going to be a shortfall in student accommodation space. So quality student accommodation is definitely an opportunity. But where I see the big opportunity is going to be in the professional commune space. So students finishing university, moving out of that into jobs, they're earning an income, but they don't want to move back home. They can't afford maybe to live in their own flat, and they're used to the communal living. So they want to move into a space where they've got, everybody's 20-something years old, they're all earning salaries, and they still want to have that sort of live with some people that are in the same time of their lives as they are. So I think there's this big space for communal living for those reasons that they're already used to living in communes. It's cheaper to live in communes, and again, about community. So they want to live with people that they know and that are like-minded and in the same time of their lives. So communal, and then co-living is the other one. So densification backwards. So parents have moved, live in their own retirement unit. They're going to move back in with their kids to now condense and combine families into one space. So co-living and professional communes are the areas that I think from the foreseeable future at least are going to happen. How can we predict that from South African perspective? Well, you just have to look overseas, and overseas it's a big trend. I mean, professional communes have been in place for the last 20, 25 years in the UK, in London in particular, and from a densification point of view, from a pricing point of view. So we've got all the indicators all over the world that tell us where our market's going to go. We lag 5 to 8 years behind anybody. So if we take a look at as our economy grows, hopefully grows, and as people move towards metros for jobs and everything else, we're going to experience the same patterns and trends as happens overseas.
No, I definitely understand. I also like that answer. I think it was a very well-detailed answer with a lot of idea starters. So everybody is going to leave here to do some homework. I just wanted to ask a few more questions before you open up for Q&A. One of your main goals is, and one of the things that you specialize in is property investment and buying and selling businesses, right?
Yeah.
So I have a little bit of an experience in buying businesses. Okay, but specifically, I tried to go the filling station route, and well, everything was done well. I had the right power team around. Our application just didn't get picked up by Total, the brand. So I was actually going to be one of the guys who are struggling right now because of the oil prices, but I'm sure the market's going to pick up for that. So we just hope the best happens there. But one of the things I had a problem with was not having people who can conduct a proper due diligence when I tried to use that model in properties. To say, okay, now I see a building. What if I buy the company, or what if I buy the cash flow? And then good part about it is, yes, you can find 100%. Some institutions are willing to give you 100% financing on that. But when it comes to due diligence, when it comes to figuring out what are the other things that you need to know about the business, it becomes a little bit of a problem there. So I have a question to say, what are some ABCs that you can share with us about buying and selling a business? I'd say buying specifically because I'm not a buy to sell guy. I love buying, not selling. Yeah. And but I'd say you can also touch on the selling for some of the people in our audience. And also, what sort of a power team do you need when you're buying a business rather than just real estate? Because a lot of people think you can just only buy real estate, but they don't know that you can actually just buy the business and buy the cash flow, which is much easier and a faster way, I think, to actually build wealth through real estate.
Yeah. So I mean, if we replace the word business and we replace the word property with the word asset, and then sort of changes everything you look at. So you talk about doing property deals in partnership and joint ventures. Just replace it with asset, and then you can look at buying business exactly the same way. And in fact, some of the strategies that I learned through buying property and creative ways to buy property are exactly the same strategies I've used to buy businesses. How to negotiate a deal, look for the motivated seller, look for their financial pain, deal with that solution, and then have payment plans against the property or the business where you can then pay them off over time. So installment sale, for lack of a better way to put it. So there's lots of ways to apply what you learn in property and just apply that to business. And to be honest, a lot of the strategies that apply in business work both ways. So what do you look for from a business perspective? Well, first thing is you need to rely on somebody who's actually done it before. Too often we rely on the professionals. So my old space, which is the chartered accountant, you'll go to an accountant and ask an accountant to now value a business. The problem with accountants is that they're taught how to do it from an accounting perspective, but not from a business perspective. So if you are going to buy a business, I would suggest, and let's say, the business I bought are all property related businesses. So if you're going to buy a property services business, you come somebody like me who has bought property service business. I can tell you the experiences I've gone through. And look, I've bought a few, and I've had one real dud, which is actually the very first one I bought. But the lessons I learned out of that first one meant that the second, the third, the fourth have actually turned out to be really good deals. So it's important that you have somebody on your team, or that either coaching, mentoring you, or that you can speak to that's actually done it before. Is the first thing. Relying on those professionals isn't necessarily going to help it. And particularly accountants. Accountants are extremely prudent, and they're really risk averse. I mean, if you trust an accountant to make decisions for you, you'd never do anything. Unfortunately. So and then when you're going to look at it, don't. If I can give one piece of advice, when we're doing anything, and it's investing in property or investing in a business, you're not looking to buy yourself a job. So I've never looked at buying a property to be the guy managing the property, or managing the tenants and collecting the money and chasing up. I've always looked at it, buy the asset, plug it into the system, let the system run it. Now there's a cost to that system, whether you're paying a managing agent, you're paying staff, there's a cost to that system and that process, but the system is spitting out money, which is what we're really looking for. And that's where that annuity income, but that financial freedom again comes from, which again I'll address just now. But same from a business perspective. If you're going to buy a business, you want to buy a system, and that's what a business is. A business is a system or process that you put inputs in on one side, the output is cash. Hopefully, you don't want to be buying a business where you are the machine, the guy running the treadmill or running the hamster wheel, running that business trying to generate, because then you just created a job. So don't ever. I would suggest you either don't buy a business, especially your first one, don't buy the business where the owner is key to the operations of the business. So buy a business from an owner who is not the key operator. There's a manager in place, somebody else is running that business. They've got the relationships. So you're buying staff with it. So that's something that's very, very important. If you are buying a business where the owner is the key operator, make sure that you've already got a business that's very, very similar, that you can simply take their business and plug it into your system. So you buy your first deal, you want to be buying the system. The second, third, fourth deal, you want to be plugging into your system is sort of the long way to put it.
No, but I think it makes much more sense. It's like a stonemason, you're picking up the right stones and putting them together and building something, which is a very, very interesting puzzle. I think I can live with that, and I think that's something that would be exciting for somebody like me. I'm also like you. I get it easily bored, so I like things that are thrilling, bigger deals. The more they're complicated, the better, and I can be able to negotiate the deals and things like that. And talking about accountants, I also went to 3 accountants when I was looking to buy a business. This guy will tell you, okay, I did a discounted cash flow like this, and then it gives you a different valuation than that guy. Then this guy gives you a different valuation from that guy, and they all tell you all the risks and all these things, and about the debt and all the stuff that might be going in there, but you end up getting paralyzed and not making a decision. So I must say that you're very right about, if you're using an accountant, then you might get stuck. So
sorry, just on that one quickly, I just want to say something. Using discounted cash flow and IRR and net present value, and I mean you can run numbers and ratios to your heart's desire if that's what you really want to. The reality is my view is this: I'm only worried about one calculation, that's ROI. So and it's my return on my investment and return on my time invested. That's it. That's right. And I know it's a really simplistic approach, and you'll have analysts on this call and people who watch this later will say, but you have to do a RR, you have to do net present value, you have to do discounted cash flow, you have to, like, for what? Like really for what? Like just right now, what I want to know is I'm getting a return on my investment. If I put my money here, I'm earning X. If I put it there, I'm earning Y. If I'm putting my time in here, I'm earning X, and if I'm putting it there, I'm earning Y, and I'm going to compare those and full stop. It's just trying to make it simplistic.
100%. But I mean, maybe they don't want to do that so they can look professional and sound like they know what they're doing.
Justify their fee, exactly.
100%. Okay, so 2 more questions, and then we're opening up for the Q&A. So one of the things that I realized is you've been in the property space for more than 15 years. yet you're still relevant and you're staying to be up to date. So one of the things that we know about entrepreneurs and people, we have a lot of one-hit wonders. We know you today, tomorrow you're gone, and things like that. So what is your advice on, staying more relevant and for more 15 years or more? That's a question I have for you.
Yeah, look, I don't think it's been intentional. I got into property and it's probably the first and only thing that I've ever done with a long-term view, and my marriage, obviously. So two things. But I very early on took a long-term view on this and said, listen, I'm going to get into property. I really love it. It's an absolute passion, and it's just been my life for the last 15, 16 years. So I think it's just because it's your passion, because I love what I do, and I don't feel like I work. I work long hours. My family, and I've got 3 little kids. They always say to me, "Yeah, I'm always working." And it's really hard for me to explain to them now, but when they're older, explain to them, when you love what you do and you're passionate about it and you enjoy it and it interests you and everything else, it's actually, you're not actually working. You're just doing what you love all the time, which is it makes it really easy. So I think that's the first thing. Life is too short to be doing something you hate. So I just pretty much spend time doing things that I really love, and the fact that it sort of comes with financial benefits and everything else is really great for me. But I really like it. And I love talking about property. I can speak for hours about property to people, about business, about entrepreneurship. So I think you remain relevant. I think too many people try really hard to remain relevant, and then their views and their point of views sort of get skewed by maybe controversy or saying things that don't really align with what's really happening in the world. Whereas if you're out there doing what you love and everything else, it's relatively easy to remain relevant. But the core thing is remaining focused. I don't allow all the other stuff to get in the way of the fact that I'm running businesses. I've got families and people that rely on me. So do make sure that's always looked after first.
100%. That's actually a very good answer. So 2 more questions. So what does it take to get a grant on one of my non-executive board of directors? That's one question. And then the second one is, if grant had a superpower, what would it be?
Okay, so what does it take to get grant on a non-executive board? I think I'd have to believe in the product and believe in the team that's there. I'm happy to have those conversations and explore. And I'm also known for being relatively blunt in terms of my outlook and my points of view. So I'd be honest, and I don't just. I think the nice thing is I don't just chase. I'm not just chasing a rand. I really need to be involved in something I believe in. I don't need to do something just because there's a rand value attached. So I like doing things that I believe in with people that I believe in, that I sort of see potential in, and to be honest, people that are just willing to get their hands dirty, I think it's a big thing. So happy to have those conversations and go from there on that. If I had a superpower, what would it be? Funny enough, it's a question we talk about with my kids often, because we always ask them what superpower do you want today and whatever. And I think what would it be? I think the one thing I would love to be able to is teleport is probably the superpower I'd love to have. And only because I hate queues so much, and I'm going to have a holistic view of queues. Queues involve standing in any sort of queue as a human being, at a bank, in a restaurant, or anything else, as well as a queue when you're sitting in your car in traffic. It just drives me mad. I think it's such a waste of time. And one of the big benefits out of the pandemic is we don't have very few people that sat in traffic. We've probably added a huge amount of productivity to our workforce by just not having to commute anywhere. So yeah, I think teleporting is the one that I'd go for.
That's an interesting one. Actually, it's the first time I hear that. A lot of guys I had were telling me about if they could have all the knowledge in the world so they could make good decisions. So teleporting is an interesting one. Yeah. Okay, so I'm going to open the line for Q&A now. I see Stephen Mulai here saying, will the reply be available? Have a meeting to attend now. Stephen, thank you a lot for actually taking time and attending, and I hope you get some sort of good value from this session. And what I wanted to say is, yes, the replay will be available on my YouTube channel, so you can just go Ezra City on YouTube, and then you will be able to find the replay there. And thanks a lot for attending there. And then I'm going to be coming to somebody here who's saying that, okay, I see Kanya Mwanyama saying, Hi, gents. What do you guys think of a property management whereby a building can house students and old age folks, whereby students help elder folks in their spare time to prepare while the elderly folks advise the students? That's a very interesting question, actually. So I don't know if you wanna answer that. I haven't thought about it again. So do you want me to repeat the question again, or did you get it?
No, I got it, Chair. So really the arrangement of having students in part of the property and then old age folks in another part where they help out. Look, I mean, I think we're actually such an interesting space because of the pandemic that made people possibly more human than ever. And you know, we're seeing these big social movements around the world happening at the moment, where a lot of activism around, you know, just wanting people just to be, again, more human and more humane with each other. So I don't think that there's not a market for it. I don't know if it's necessarily the mass market. I don't necessarily know if you're going to go into a space where you're going to create massive volume in terms of having this arrangement of students and old age homes joined together as a assisted living type of space. But there certainly could be an opportunity in areas where it could work. I do think that you've got two very different markets there. So potentially having a property arrangement where there'd be separate buildings and then maybe an interaction, but not in the same building. It's simply because students and sort of old age people, they have very different lives, very different time cycles. You know, so yeah. So the arrangement could work where there's two buildings alongside each other and there's that cross-pollination or cross-working. But I don't necessarily know if it's a big volume or big scale, a model that's heavily scalable.
100%, 100%. I think that's a very good answer. Okay, so I'm just going to try to answer as many questions as you can. So if you haven't popped us a question, please do so. And I see the next question here is coming from Tandy, saying, hi, Grant and Ezra. Hi, Tandy. She says, most analysts are speculating that SA will worsen before it recovers. Is this the perfect time to start investing in property, or one should wait for post-COVID before considering entering the market? So I think we answered this question a bit, but I think you can also be making emphasis on that one.
Yeah, cool. So I mean, definitely going to get worse before it gets better. We haven't seen the effects of everything happening yet. You know, just the National Credit Regulator putting a moratorium on any action against anybody that's defaulted on their debt is an indicator, and that's only going to come. They're going to reactivate that, I think, at level 1. So the banks can't take action against anyone that's defaulted. There's a moratorium across all of that. So we are going to see the real effects probably happen in the next 6 months. So definitely going to get worse first. And also depends how long this soft lockdown lasts for. So is it worth waiting? It really depends again on your outlook and what your intention is in terms of property. So again, your goal. If you're looking to buy for the long term, you know, there's no better time than now, because that very property might be in an area or an area that is well sought after, that might even pre the end of lockdown spike. So you've got these pockets of excellence. So I would say if you find a property that's nice discounted to what you traditionally knew as the real value of the property, buy it now. If you're looking to capital flip, then you know, I would say, you know, you probably want to start waiting till we get towards the end of lockdown. So really, again, depends on your strategy.
True, and I think with regards to buy to let, I think we're going to be getting a lot of well-priced properties because of the panic and uncertainty that's coming. Also, a lot of sellers are willing to let their properties go at any price at this point.
Yeah, exactly.
And I think that might be a good thing. I mean, the value is not going to change that much, as you say, especially for freehold houses, because it is going to change for a lot of apartments, though. But for freehold houses, it's going to take time before, you know, we see the value or the prices going down. But in terms of what's going to be on the market or being on the sale, then I think you might be seeing a lot of well-priced properties that are on the market, and that's a good advantage to take care of. Okay, you see Edgar Jaji. Edgar is saying, what is the key attribute an entrepreneur must have in order to succeed in property?
I think it doesn't matter to succeed in property or not. I think the first thing is an awareness from your perspective on your strengths and your weaknesses, and playing to your strengths and finding a team or expert team that have strengths where your weaknesses lie. So really building a team is vitally important. I think an entrepreneur by nature needs to be a strong leader. And I think there's a really strange sort of environment going on in the last few years about what real leadership is. And I think we've seen glimpses of it from the South African government point of view, from an international point of view. We see glimpses of what it's not. So I think entrepreneurs need to be strong leaders. They need to be, curious and interested, and then they need to be able to be aware of what their strengths are, and cover their weaknesses with people that have those as strengths as well.
100%. And I also want to add on that to say the most important thing to do is also believe that you can do it. Because if you don't believe that you can do it, then that's where all the problem comes from. So if you don't believe that you can be successful, if you don't believe that you can, close the deal, raise the money, find a good deal, become wherever you want to be and achieve your dreams, then that's where the problem, begins. So I'd say that to add on actually understanding who you are and having a good introspection about your risks and strengths, I would say also you must believe that you can be able to become successful in order for you to do that. So I see a question from Candice here. Candice saying, when you say common living, do you mean house share or a common area and then each other to their own room, etc., etc.? Oh yeah, that's actually a good question. I also had this thing in mind to say, okay, what does the plan look like on the floor?
Yeah, so I mean, commune living is the same, and there's so many different terms to call it. People call it multi-let or commune living, or HMO is the one, which is actually a term from the UK. Essentially, I mean, multi-let or commune living is you renting out the rooms, and that's where you deriving your income from, is renting out a bedroom, or in certain circumstances even a bed within a bedroom. And then there's communal space or common areas that they make use of for kitchens and potentially sometimes bathrooms, living rooms, TV rooms, that sort of thing. So there's a dedicated space within the property which is yours and yours alone, and then there's areas that you share with other people. So these house share ideas.
100%. Okay, so I think that also makes it a little bit clear, because I've seen a couple of models, and that's one of the models that we're working on right now, redesigning some of the developments that we're doing, like Greenfield. So it is like, people have their own rooms, and then you have like, communal areas where you can watch TV, but at the same time, some floors have, communal bathrooms, but some of them have separate bathrooms, so people can actually have their own bathrooms if they want to. So I think going on what you're saying, I think it does differ in terms of what the guys are looking to do. Okay, so Bongani Ngwenya, I was asking, isn't it a better time to wait a little bit more before purchasing? Have we really seen the bottom of the market yet? So I think you answered this question before, but I think you can also touch on that again.
So what I'm going to say here is if you speak to any investment trader and guys that are trading equities and shares, you said when's the bottom of the market coming, and they try and read a downward trend, and they never try and read exactly when the bottom of the market is, because you're never going to get that exact trough, or when you're selling on the up market, that exact peak. So it's going to be very difficult or near impossible without guessing when the exact trough and peak is. So who says we're not in it right now? I mean, like I said, there's been quite a lot of activity in the last 2 weeks in terms of buying. I mean, some of our offices have done several sales. So maybe the market's turned already, but it's very difficult to say. What we can say is that there is going to be an extended buyer's market, and the opportunity is now for the next 18 to 24 months is for you to buy. Whether it means you buy now and you sit in a space where those values go down and then they come back up, or you buy in 18 months' time, it's very difficult to say where they're going to be. But the reality is once you get into the asset, you own the asset. Whether that price moves up, if that price moves down, it doesn't matter, for as long as you hold that onto that asset, with the knowledge that eventually that asset's going to be worth more than what you bought it at. So you shouldn't, as a buyer of property, and shares is the same. You buy now at 10 Rand or 1 million Rand, and then it drops down to 900,000 Rand, freak out and sell it. Because only once you sell it, you realize that loss. So you hold on to it and you wait for that to come back, because we know through property cycles and share cycles that that'll eventually come back up and the value will go up again. So I know everybody wants to read the bottom of the market. It's near impossible. If you do know when the bottom of the market's coming, please tell me. I'd love to know. But other than that, look for the opportunities and buy when you see the specific deals, because also, there's areas that are going to be booming, even through lockdown period. There are areas, I bet you, if you go and look at some of the stats out there, there are areas that have been increasing in price, not decreasing, as well.
100%. So in short, you were saying be on the market, keep looking for deals, run your numbers. And I would like to add there to say just negotiate better deals now because of what's going on right now.
Exactly.
Yeah. So I think you can also use this as an advantage to negotiate better deals and try to let the seller know that they can have their house on the market for a very long time. We had a house actually last year that we just got. I was up for 1,750 when we got it, and we managed to negotiate it to 1,450. So because we just told the seller, look, things might be like this for a very long time, and you're not even sure if you're going to be getting a buyer. And he agreed on that. And the cash flow is good. Getting it accredited with the University of Johannesburg. Actually, if you guys haven't, they opened their applications. They're going to be closing, I think, on the 26th of June. So for people who are investing into an accommodation close to the university, you might also want to be able to take advantage of that.
Yeah.
So I would say, yeah, just also negotiate a bit. So Edgar's back again saying, what is the future of commercial property given the recession we are in and people looking to work on home? This is an interesting question, but I'm going to let you go in first and then also in 2 minutes. Yeah.
Cool. So commercial property is under huge pressure. Okay, there's no illusion that they're going to have to change their business models and reinvent themselves. I question why people are still building malls, as an example. And some of the malls that have been recently built are obviously nice. They're absolutely suffering. So what's the future of commercial property? There is a future. What does that future look like? Who knows? All I can tell you is that they need to reinvent themselves. People looking to work from home, I think we've got to be careful that assuming that a major part of the population are going to end up working from home. I think businesses have realized that there is a flexibility in it, but I also think that there's maybe a realization for a lot of people, and certainly I know even parts of our teams that realize, working from home was always a great idea, but I really want to go to an office space and work in an office space. Again, we're social animals and we like being with people. So there's that sort of that double-edged sword. Stay at home, work at home by yourself, or go into an office and work with people, throw around ideas, speak to people, brainstorm, everything else. So I think we need to be careful making the assumption that everybody's going to suddenly want to work at home. I mean, I, for example, am working at home at the moment, but I'm really looking for offices out in near where I live. So I think we're going to move away from maybe working in commercial centers like Stanton and those areas. We're going to start looking for much more convenient commercial space where we can go to offices that are near home. So that then affects the residential market in the same way. People will look to live close to where they work for convenience reasons.
100%. So I think we touched on most of the questions, and I think that was it for today. That the questions that we got. And guys, thanks you guys a lot for attending. If you have any more questions that we didn't touch in here, let us know. Pop me a mail on my email address, on the emails that you guys were getting when you registered. Also, another way is, you can also hit me up on Facebook, anywhere else on social media, LinkedIn, anywhere. I'm happy to respond to you guys. And also, you can also get in touch with Grant. Grant, actually, where can these guys find you? And do you have any last thoughts on that or what you want to share with us? And also, before you go into that, I wanted to say that if you haven't also already gotten our free ebook, you must also check it out. It's also here in the chat box. And also, we mentioned that we have a course that is actually just going on right now on a launch price until the lockdown and things get much better. So take advantage of these things, guys, and invest in yourself. So Grant, the floor is yours.
Yeah, brilliant. Thanks. Yeah. So if you want to sort of follow me, you can follow me on Instagram. I'll just Grant Smee, or you want to follow Epic South Africa, Epic South Africa on Instagram as well. We've got Facebook pages. Just jump on there and ask to be join the group, and we can let you guys in and be part of that community. And I'm going to agree with Ezra here. Is first and foremost, is get educated in terms of what you're trying to achieve. But I want to just caution by getting educated by people who are actually doing it. I think there's a lot of people who, and a friend of mine, Lisa, uses the word vapor. A lot of people, there's no substance to what they're saying. They talk a good game, but they aren't actually out there doing it. So I think if you're going to get educated, go to people that are actually out there in the space, whether it's through a paid option or somebody who can mentor you. But just get educated by the right people to make decisions going forward. And then network is my big one. Your network is vitally important. So the better you can network, the more people you meet, the more people you have conversations with, the more not only ideas you get and opportunities and more creative you can get, but also the more business partners you'll meet that align with your values and that you can expand and grow with as well.
100%, 100%. Now, Grant, thanks a lot for joining us today, and I enjoyed the session. I hope all our attendees did gain a lot of value from this. And anybody who joined us today, I want to thank you guys a lot for joining us today and taking your time. I hope we made sure that you gain as much value as you can from these sessions. And this is what we try to do all the time. Every Thursday with you guys, we're here with you guys, giving you guys property updates, some live stream training. And I will see you guys next week. And I enjoy the rest of your day. As I see, Candice is saying thank you, Grant and Ezra. Thank you, Candice, for joining us today. And thanks for everybody else who joined us. I think this is where we're going to be ending our session for today.
Thank you, Ezra.
See, is there a question? Okay, thank you, gents. All right, now, thank you guys. See you next time.
Cheers.
Bye.